Hey everybody, Brian from Bear Bull Traders here. It's the weekend, July the 2nd. This is obviously a long weekend, no matter if you're in Canada, the US. So I hope you're enjoying your extra day off here. This is, of course, the weekend video. We'll just go through what happened last week and look ahead and try to figure out where we might be going in this shortened trading week that's coming up next week. So let's get down to it. So let's take a look at what happened for the last part of the week here. You'll see lots of headlines, I'm sure, on the weekend here. This was the worst market performance since the 1970s for the first half of the year, which we just finished out. And hopefully the next half might end up being a little bit better, but we'll have to wait and see. Powell did comment during the week that there was no guarantee of a soft landing. I think he was kind of stating the obvious, given the needle he's got to thread here. But it did put the traders and investors on edge. And of course, we ended up down on the week on all the markets. You can see here the Qs took the biggest downdraft. And of course, they're the ones with the risk-on assets. So they were the ones that got beat up the most here. And the Dow with all their stocks with the dividends, more safety trades fared probably the best out of the bunch here. And of course, going to safety trades, utilities was top of the green list for the sectors. Energy, we did actually make a little bit of a rebound. I did mention on my last weekend video, I thought energy was due for a bounce. And we did get a bit of a bounce, although just barely. Of course, with the risk-off scenario, all the risk-on trades got treated the worst, and you can see consumer discretionary and tech were well in the red on the week, and those are the ones that are risk-on, and it was not a risk-on week, so they fared the worst. 10-year Treasury note, the 10-year actually inched up a little bit, while the 2-year really took a bit of a dive here. So the spread between the 2-year and 10-year is a lot wider at almost 0.4. Maybe 0.4 basis points. US dollar slightly down on the week, and I guess following the 2-year. And of course, Bitcoin has been still on a bit of a rocky ride, and as of the weekend here, we're down below this 20,000 level, and weakness does look like it's continuing here. So that's where we are right now. And as always, before we get into looking at some specific charts, just a really quick look at my new book on Amazon, how profiting as an active trader. And it's there, just been published in May, and had a few ratings already on it, all looking pretty good. So if you haven't had a chance to check it out, there it is. So let's take a look at some charts here and see where we've been this week and where we could be going next week. Start out as always with the treasuries, and you can see here we had a pretty decent down week on the 2-year. So interest rates dropping on the 2-year, coming back to where we broke out from. So it'll be interesting to see if we fall further. But again, sort of slow down, recession fears, and then interest rates usually drop. So the 10-year we dropped here as well, down at 2.88. On the 10-year, coming back down under the 3% level. And we get into the transports. Transports again had a couple of up days, Thursday and Friday. And again, we're still in this downtrend here. You can see every rally is sold into. We just keep making a series of lower highs here. So we did seem to break out from this trend here, couldn't hold it. We got back up to the moving average and rejected again, but it'll be interesting to see if we've kind of put in a bottom here. And if you're looking at some of the momentum indicators, they do look like they're curling up here. So on the daily chart, transports looks pretty decent. The weekly, the stochastics are turning here, which is often a sign we're either going to consolidate like we did back here where the stochastics turned, and then we ended up doing a little bit of a pop there, but that's often a sign that again we might be putting in a bit of a temporary bottom here. The Dow, again, kind of a double bottom or a higher low here. Again, we keep putting in lower highs, so this if we can push through here in the next week, get above this level, that will be an indication of a break in trend. And you can see here momentum indicators are all going in the right direction if you're a bull. And on a weekly, we might be again looking for a little bit of a bounce here on the indexes next week. We certainly went out on a relatively positive note on Friday. The Qs again went out near the highs on Friday. Again, stochastics and momentum indicators seems to be trending in the right direction. We did put in a higher low here. So again, this will be the test to get through this last lower high that we tried to get through. We may again just push up and then sort of consolidate sideways. And as I mentioned, or as I'm going to talk about earnings coming up this not this week but next week. I think a lot of people are kind of sitting and waiting just to see what kind of commentary we're going to get going forward. Guidance from the various CEOs and CFOs in the company. So, and again here, the SPY, nice bounce on Friday, went out near high of the day. Again, sort of looking positive for a continuation rally, but then again, you've got this sort of 380 level that's going to be, and maybe even 385, this moving average. It's going to be an area where we're going to see some resistance until we start seeing some earnings coming out and some commentary. Again, the SPY, I'm going to say it's not the same kind of commentary as the other three indexes. We're just looks like we're trying to put in a bit of a bottoming pattern here for the time being. The VIX, again, you can see here really we are just sort of trading in this range here. We're coming back down to this sloping trend line. Let's see if we break through it. But again, if we consolidate sideways or maybe even rally a bit next week, this will probably continue to break down here. The volatility index, or some people call it the fear gauge. Anyway, and here's the dollar really putting a bit of a double topping pattern here. The dollar is making it difficult for emerging markets to break out. Strong dollar is also a bit of a pressure on commodity prices, which we've seen come well off. So I think this trend looks like it's going to continue, and we'll watch to see if we can break out of this 2820 level. It certainly seems to be, this seems to be an area where we're having at least some topping action here. Bitcoin's kind of quiet on this weekend. You can see here we're kind of just chopping sideways around this 19,250 area, but it continues to look a little weak on the daily. And on a weekly, again, we're pretty much entrenched in a downtrend here, and again, there's a whole lot of airspace that could come into play if we break below this 17,000 in a slow grind. There's a level here around 11,000, 12,000. They could come into play, but you can see here we've already lost this 200-day moving average. All you can say for sure is stochastics really oversold, RSI's really oversold, so maybe we'll get a bit of a bounce here. But it's not, I'd say the trend is still down on Bitcoin. So lastly, some stocks I'm continuing to watch here. Amazon, still like this one. It's still holding this sort of 104 level, 103 level. So I think you can keep selling puts against this, that 100 level, and it looks like it continues to want to hold that level, so you can just sell puts and collect the premium. And again, it's a bit of a hope that it doesn't drop below there, but it certainly looks like it's got lots of support there anyway. Baba is looking kind of interesting. It's been in a solid sort of uptrend here. You can imagine the drawn line. I haven't drawn it here, but it looks like this 120 level is looking like an area that it's probably going to have some challenges getting through, but if we can break through it, that's the 200-day moving average as well. Baba's kind of looking interesting setting up, but again, it'll, this continuing series of higher lows on every pullback is relatively promising, and again, it looks like it's in an uptrend. A lot of people don't like Baba just because of the risk by the Chinese government, but I think maybe some of that's behind the company. sort of put that to bed, and maybe we're not going to get some more weird announcements out of the Chinese government that's going to really slam the Chinese stocks. CHPT, I did take a lot off. I still have some. I was selling calls up here against it as well. Had a bad day on Friday and almost stopped out. So I'm going to see what happens tomorrow, or I should say Tuesday, if it continues to break down. This 12 level could be support again. So I might consider adding it back there and a tight stop. Disney, again, Disney's sort of the same sort of story as Amazon. It looks like it's really bottomed out here. Again, we're kind of putting in a little bit of a head and shoulders pattern here. And maybe we're going to hold this sort of 92, 93 level and maybe head back up over 100, which will be the psychological level. Things are looking pretty positive from a momentum perspective on the indicators. So kind of liking Disney here. Again, probably going to be a little bit of nervousness going into the week of the 12th as we get into earnings season again. Again, IBM, I'm still keeping an eye on this one. I'm not convinced it's going to break out yet. Some of the tech sector, like the semis, have been really beat up. Not that this is a semiconductor necessarily, but this tech sector has really been under pressure in IBM. But it looks kind of promising the way it's setting up. Philip Morris, again, this is more of a safety trade. People are going to smoke regardless, and I did have some. I did sell it when it was up over 102. I still have a little bit left. I'm just going to see as long as it holds this 98 level. I'll be staying in it and hoping for a break of 102. And if it does, I'll add more. Cisco, I've been trading this one off and on for almost a year now, just trading these ranges, and it looks like it's going to break out here again. This is not Cisco the tech company. This is Cisco the food supplier. So food supplier to restaurants and various entertainment venues. And with the economy seeming to come back and the restaurants being full, Cisco seems to be doing a pretty decent business here. So Cisco looking good for a run back up to sort of this level, 89. We can get a bit of a pullback here on Tuesday. Might be good for a continuation. So here's oil. Oil did try to find a bottom here last week. We had a bit of a pop and then a pullback. But again, it just seems to trying to hold this level. Certainly the fundamentals for oil are good. Lots of demand and limited supply. So again, XLE kind of held this level. This was kind of the bounce I was looking for last week. If you watched my last week's video. And healthcare. Healthcare is looking very strong. Had a bit of a choppy week here, but we're trading in a range. So this 127 level, 127.50 level is a good area to trade against, and 130. If we can break out here and get through the 200-day, we could get up to sort of 132.5. Probably another area where we'll have some resistance, but things look pretty good. Volume's decent. Stochastics look strong. Momentum to the upside with RSI looks strong. So yeah, those are some of the stocks I am going to be watching next week, with a following week earnings season in mind for those. So they might be very short-term trades. So just wrapping things up here, putting a bow on it. Again, July 5th, we'll be back trading, shortened trading week. This is where the Dow is right now, the Qs, the SPY, and the IWM. Of course, most of them are or at least they're all down from previous week. So support and resistance on the Dow, we're still in that 30 to 33,000 range. You can see the rest of the support and resistances for the SPY, but they're pretty much the same as last week. We're still sort of stuck in a range here. Maybe the Qs are a little bit lower. Wednesday, we've got ISM, non-manufacturing index. That should be kind of interesting. See what the manufacturing sector, non-manufacturing sector is doing. Again, we're hoping for a bit of a slowdown, or at least the markets are hoping for a little bit of a cooling of the economy, and that'll help the markets in the long run. Earnings, real slim earnings this week. The only thing that really of interest is Levi, and of course the following week we're going to really get into the next set of earnings that are coming up this week of July 12th. So as always, we'll be kicking out with some of the financials: JP Morgan, Morgan Stanley, Citi, Wells Fargo, Pepsi, Delta Airlines, United Health, all those kicking off on the week of July the 12th. But this week, a very light week for earnings as we get ready to get into it. And this will be quite interesting because I think the markets are looking for some kind of direction, some kind of guidance from the various companies on how they see things finishing out the year. So I think, again, it's going to be a volatile earnings session. So that's it for everybody. I hope you're all having a great long weekend, and we'll look forward to seeing you. 8 o'clock, we'll be starting the pre-market show live on YouTube. And then, of course, our members will be trading the market open at 9:30. So have a great rest of the weekend, everyone, and hopefully see you all Tuesday. Stay safe. Bye for now.